Good evening and welcome back to the Money Indexers YouTube channel. In today's video, we are taking a look at Wells Fargo Company. Wells Fargo Company has had a very interesting 5 years. It is up a whopping 76%. It has made a comeback since the COVID lows of around 265%. And this company has had a very interesting, past. They used to have a lot of fraud going on in this bank. Since then, a lot of that's been cleared up. Taking a look at their revenue has been increasing lately, and their net income has also been going up. Not a lot. It's the same it was in 2021, but their revenue has increased. Their EPS, earnings per share, has went up as well. Looking at Wells Fargo at a 10-year chart, so let's see, where is it? Around August 2016 to today, it is up 85%. When we take a look at the S&P 500 since August 2016, it is up 255%. You will not see a single YouTuber mentioning that in the last 10 years, the S&P 500 has smoked Wells Fargo. You won't find a video on YouTube saying that. When you look back at 2006, so let's see, 2006, August to today, it is up 152%. 20 years, it is up 152%. When you go look at the S&P 500, August 2006 to today, it is up 511%. That is a pretty big difference, folks. That is a pretty big difference. And then when we look at the final test, which is a 30-year chart, it really doesn't get more fair than that. 30 years, right? Let's see, 30 years. By the end of the 30 years, you were up almost 600% with Wells Fargo. And at the end of the 30 years with the S&P 500 ETF, you are up 1,061% by just indexing. And nobody knows if this company will be here in the next 30 years. But you know what will be? The S&P 500. And it will be much, much higher than it is today. Now, Wells Fargo is a component of the S&P 500. But fun fact, it has been shrinking in size as a component for the last 20 years. Partially due to the fact that the S&P 500 is more tech heavy now, right? So companies like Wells Fargo and 3M and Honeywell and all these other companies, they weigh less than they used to back in the index. And that's the beauty of the index. As companies become less relevant, well, I wouldn't say less relevant, but like less relevant, less market cap, making less money, they have a lower rating in that index fund, right? That's why in a lot of cases, it's better to own index funds because they can swap out companies and replace them with better companies before the public even notices. And I like to say a fun example of that is when Oracle left QQQ, they replaced it with Tesla back in 2013, right? So who would have thought? Anywho, folks, hope you enjoyed the video. This is a friendly reminder to keep indexing, and the S&P 500 has officially slain Wells Fargo Company.